Well, folks, looks like we are getting Uber Eats delivery of Wendy's tonight because we hit the jackpot. We made the tendies. What a way to start the day. Up nearly $1,500 on the day via a swing trade and a day trade of Icahn Enterprises. Now, if you guys haven't seen my video on Icahn Enterprises that I recently posted, essentially there's a whole lot of drama going on with the company where Hindenburg Research, the short seller research company, released this huge paper accusing Icahn Enterprises of engaging in Ponzi scheme-like activities, such as with the funneling money from new investments to pay the dividend of their old investors. This paper is really interesting, and Hindenburg Research always drops these bombs on companies. In the past, they have dropped company bombs on Square, which is now Block, and Adani. It's crazy. So Icahn Enterprises, run by Carl Icahn, the legendary fund investor, is down about 45% over 3 days since this paper was released, and we jumped in on the action. Of course, I opened a short position in Icahn Enterprises yesterday morning, and before we get into the whole price action of this will be a little bit of a short video, but we're gonna show you my actual trades that I ended up making. So yesterday at 11:43 Eastern time, I opened a short position of 395 shares at $32.52. Then I held that all through yesterday. I held it over the night, and I sold this morning at 9:34 Eastern time for $29.47. Now, 1 second, let me turn over here, and I'll just show you. I did the calculation for the profits that I ended up making, and wow, would you look at that? I made a 9.38% gain. Now, this is crazy. When I said I'm up $1,500, it's not like I'm trading with the big bucks. I'm trading with 15 to 20 to 30K at a time. That's what I'm comfortable with. So I entered this little bit of a short position, and now up basically 10% over 2 days is crazy. So let me launch into the analysis of the company here. Let me open up Webull. This is an expanded 30-minute chart looking, okay, when I last posted, when I took the screenshot, Icahn Enterprises was down 41%. So this is basically the fallout from when they released this paper. So if we look right here, I think that I got into the short position pretty late in the game. 2 days of volatility had already passed. So I bought in around right here where this like yellow and green squiggly are. So first thing with my strategy, I was feeling like, okay, this thing has already sold off like a lot. Like the thing's already sold off like 35, 40%. So I've got to be really cautious here because we might be at our, threshold for how low the stock is going to go. And of course, one thing to point out about the Hindenburg Research report is it accused Icahn Enterprises, or it said basically that Icahn Enterprises was overvalued by 75%. So not that the value of the company initially lines up with the stock price immediately, or, has to line up at all ever with the stock price. That's just one thing to note, that they said that they were overvalued 75%. And when I was looking at this, when I opened the short position, IEP was down about 35%. So I just wanted to be really cautious. That's just one note to make. Let's look at the 1 minute chart of today. So this was today. I sold at 29.47 and we went as low as 28.30. Now, I wasn't looking to make a perfect trade. I was just looking to make profits. Of course, I didn't want to give it all back this morning by a potential reversal, which I started to see. I started to see some consolidation in the movement. So we'll just look right here, and here is that short position that I took. So I bought right there yesterday morning, I held it over the day, and I held it overnight, and then I sold briefly 6 minutes after the market opened today because I felt comfortable with, hey, this is enough money. I felt like I made enough profit, and I might as well just lock in my profits because, I'd rather take the money than it going and ended up reversing on me. So we see that little green line right there. So the red line indicates what I shorted, my short position. So it went down, so it means I made the money. And then green line right here, we'll zoom in, is, okay, zoomed in right here. That green line is where I bought back in. So I did this long short, and then I just did this really quick day trade because I saw it going all over the place here. So I just bought at 29.10, and I ended up selling at 29. $14.90. So we'll look at my total P&L, $1489.30. So pretty crazy. One thing that I really want to note is I am a new trader. I'm in my first 6 months. This is probably, one of my top 3 best days trading. And I just want to give one piece of advice. Always use limit orders, especially when there's lower liquidity and lower volume in these stocks that you're trading. Always lose limit orders. You can get caught very easily if you just put in a market order on a trade and there's low liquidity. You can notice by looking at that level 2 market data, looking at that order flow, where the bid and the asks price are, and all of the bid and the asks, the spread essentially. If there's low liquidity, then chances are that the spread is really high. And you can notice this a lot in aftermarket hours trading or pre-market trading as well. There's less liquidity. So always do a limit order. We'll go back right here one more time. And I just want to say this thing was really whipping around. I mean, I don't know if you could tell, but like large candlesticks, it was really whipping around. So I put in a limit buy at 29.10 and I put in a limit sell. Or I actually put in a stop sell at when it was at 29.80, and so a stop sell, a stop limit sell. So that means that I put it in for 5 cents. So basically it hits a price. If it goes 5 cents lower than the last price, then it'll execute a sell order and it'll get me out. So that's one way. That's another way to protect yourself in order. I remember I was trading this like really low liquidity penny stock this one time, and I just put in a market order and I ended up losing like $500 just like that. And as soon as I sold, I saw the chart, I saw the graph just like plummet right there, and I went, what the heck? Right when I sold is when that stock went all the way down, and I realized that I had caused that candlestick down because there were only something like 500 shares or 1,000 shares shorted in that 1 minute time period. And I was, of course, trading with a few hundred shares myself. So I basically caused that large candlestick. So that's one thing to worry about. Maybe you don't even want to trade in low liquidity stocks, but you essentially do want to trade using limit orders. You don't want to use a market order. If you're trading in something like ETFs or NASDAQ ETFs, maybe it's fine to trade with a market order because there's very high liquidity. You can get in and out very quickly. But in any other case, I mean, just using a limit order is really key. So anyway, everyone, thank you for watching this video. I wanted to post a really quick one and show you about my profits. I made about almost $1,500 in the day. So I'm really proud of myself. And we'll continue with the channel. I do want to stress that I don't know much about trading. I've only been trading for like 6 months now. And as I said, this is one of my top 3 days. Time and time again, all the profit that I've made, I've just given back to the market because I've gotten a little like cocky and extreme thinking like, oh, I've cracked the code now. I can now make unlimited profits. So you got to be really careful, which is why I was very hesitant to go into the short trade because the stock was already down so significantly. But I felt like there was still a lot more to go. I still felt like a lot of news was coming in about Icahn and Hindenburg. And of course, tomorrow, May 5th, is actually when Icahn Enterprises has their earnings call, and they release their earnings. I believe that they're expected to have an earnings of 19 cents earnings per share. So that's the expected. So we'll see. I didn't want to keep that swing trade position open until tomorrow because earnings calls really get vicious. So, I mean, it could really go the wrong way for me. So I just wanted to kind of, insulate myself from loss. And oh, look at that. I had my picture-in-picture up the whole time. But anyway, okay. Thanks everyone for watching this video and hope you have a good one. Bye.